Hello, welcome everyone. And this is Seewing from the Lead Real Estate Network. And I have Julie and Mark back to co-host this webinar. And we can talk about how to use self-directed IRA to buy rental properties. And also we can talk about how you can continue to use your IRA inside your property and down the road in the future buy more property using the growth of the appreciation on the cash flow of the IRA and to roll the money to buy more real estate down the road so you can scale your real estate portfolio all using the power of the IRA to leverage in a very tax efficient basis to reach financial goals. So with that said, thank you for being with us. I appreciate your time once again. You will have appeared on many of our Zoom webinars and endorsing what you have done. And so I really appreciate the value of your time and showing people that you can do it. If you can buy rental properties, in fact, you buy rental properties using regular financing, using your name, which what most people does. But I realized over the past 20 years of me consulting investors that I still find many investors, most investors, not only within our network, but investors from all over the country, they have very little clue that they can use their IRA to purchase rental property inside the IRA. Without further ado, thank you for being with us, and Julie and Mark, I appreciate. We can use your experience to share with the audience out there how much success you have achieved doing this. Again, this internet is quite slow, so let me do a manual click on my slideshow. Self-directed IRA action plan. So for those of you who are not happy out there with your traditional IRA investing with the stock market, mutual funds and all that, and because of lack of control, you don't know what's going on those portfolios, and the returns are, relatively low. You have the opportunity to transfer or roll over to your previous plans into a self-directed IRA to purchase rental properties inside your IRA. If you have a previous employer 401k or, traditional IRA, Roth IRA, whatever, you have the ability to transfer those accounts into a self-directed IRA account so you can buy rental properties. And the only thing you cannot do is if you're still looking for a current employer, for the most part, you cannot roll over those money unless you quit or whatever that employer, then you can roll over. So anyway, I challenge everyone to just go over your brokerage account for those you want to enter the real estate and buy use IRAs just to gather up. Or a lot of people have so many different accounts with so many different brokerage accounts. Oftentimes you have no idea where they're located or how much balance you have. So that's one thing I found out when I work with the investors. So anyway, even if you're married and both of you have separate IRAs, you can also transfer those individual accounts and do joint IRA investments under both IRAs of your spouses to buy rental properties inside the IRA. So very powerful. Yep. How do I buy real estate with my IRA? Again, like I just said, just do a easy transfer without any consequences, without any tax situations, tax-free transfer into an IRA custodial accounts. There are more and more self-directed custodians who does this, not too many, but we're showing you two of the companies we use to help you self-direct your traditional IRAs into their accounts. And the transfer fee is very minimal, as you can see. And we can also talk about non-recourse loan. We have a non-recourse lender contact information on the screen as well. So, but at the end of the day, again, we will talk about that. We can talk about non-recourse lending, how it impacts your future purchases using the IRA. But for the time being, I'm going to have Julie and Mark very shortly talk about their experience of buying two rental properties in our network market in Buffalo, Niagara Falls, entirely using the IRA. One single family home rental and one duplex, but and they're waiting to speak momentarily. The sources that we use is not mainstream. The non-recourse lender, there's only one non-recourse lender out there in the country. And we can talk about that. Who can help you to leverage your IRA. Similarly, with the self-directed IRA custodians, we just shared that with you. So without further ado, yeah, Julie, I'm going to use this sample property. May not mirror exactly the property you purchased. So using this pro forma, Julie and Mark, how were you able to go through the paperwork process? Just walk the audience through from a high level why you decided to buy, why you decided to roll over your IRA to buy rental properties, and the brokerage account you have probably previously, and how did you communicate? How did you facilitate the paperwork? Walk us through. Then when you roll the money into a self-directed IRA, and you eventually pick a property in for Niagara Falls, and then you pick a property, then you can do the paperwork, and I want you to walk everybody through what's the purchase price, and then what's the rent, and when you receive the money, as you see how the money flow works inside your IRA. So go ahead, Julie and Mark.
Good seeing you again, and we're always happy to do these videos. Hopefully, encourage other people to do the same thing. I think when we met you about 2.5 years ago in hearing that you could actually invest in a retirement account was revolutionary for us. Because for Mark and I, we hadn't really saved a lot of cash outside of our IRA. And then our IRAs were not actually as big as they needed to be based on where we are age-wise, but we worked with what we had. Which I think was the important thing. When I listened to your class, I took your half-day seminar, and when I realized that you could actually buy a property with your IRA, like inside of the actual IRA, that was like, we had to talk to you some more and find more about that, because that's where the majority of our liquid cash was. And we had it invested like traditional people. They have mutual funds or whatever. We even had it with a money manager for 3 years, and it literally did nothing. I don't know if our money wasn't big enough for him to get involved with it, but literally like in 3 years, we almost exactly what we had put into the IRA is exactly what it was like when we took it out of the IRA. So that was disheartening. That's not always the case, because I wasn't an investment broker at one time. And the goal is to grow your money, but the market is the market. And maybe the market was just not good at that time. We decided to take the leap. And we each had very similar amounts in our IRAs, and we decided that we were going to go for growth, because we always knew we wanted to invest in property. We just didn't have a lot of cash outside of our IRA to do that. And we live in Southern California, so we weren't anywhere close to having money to buy a property outside of the IRA. We just didn't have that kind of a down payment. And even if we did, we probably wouldn't go cash flow for years. So we decided to look at something like the first one I did. In terms of the paperwork, it's just like any other rollover. If you rolled over your IRA from your former job to whatever bank, Bank of America IRA, Wells Fargo IRA, Chase Bank IRA, it's the same process. It's the exact same paperwork. But this one, what we rolled it into is called a self-directed IRA, which is an SD IRA, if you're seeing the initials. And it sounds more complicated than it is, but it's not. It's just exactly the same type of paperwork. You roll it in, everything is done online. We send it to our former broker. They send the funds over, and we use the interest group. Bill Neville was our rep. And one thing about the interest group, and I have nothing else to compare it to, because I've never worked with a self-directed IRA trustee, but they're very efficient, extremely efficient. And that gave me a lot of comfort, because I don't want to send my money, all of my hard-earned money over these years somewhere, and then have to take 2 or 3 days before somebody will return a phone call or somebody will return an email. And they were very efficient. I mean, it's almost like the reps that we were assigned to work with, it felt like we were their only client, because I could send an email with a question, and then within less than 15 minutes, I get an answer back. So that was really comforting for me. Anyway, so Then we started looking at properties. Once we got the money over to the interest group, it's just sitting there in liquid cash. Now, the reason it's called a self-directed IRA is because we are the ones that are directing how the money is going to be invested. In this case, we were going to invest in investment property. And Seewing, with the information that you gave us early on about the different areas that you work with, and you have these turnkey providers in all these different areas, we narrowed our goals down to working in upstate New York. And you have the Buffalo, Niagara Falls area, Tonawanda, Lockport, all those up there. So that's what we decided to start, because it really met our need of having cash flow. We were looking for cash flow. We were looking to build those IRAs, as much cash flow as we could get out of it. And what's nice about the IRA is every time the money comes in, it goes right back to the IRA. So now we have this automatic built-in money-making machine, basically, that's paying our IRA every month and building up the cash in that IRA, which will eventually allow us to buy more property. Going back to the one that you have on the screen, Woodlawn, which is actually one I've been looking at for a while. They've actually got it down to a price that I think is reasonable right now. The turnkey provider that we're working with is Buffalo Turnkey, upstate New York, and the Canadi family, and they are amazing. And so our very first property, I put it in my IRA, very similar to this one, size, price, everything. Actually, it was a little bit cheaper. I think I got it for $53,000. And so basically, you find the property you want, and Seewing, you taught us how to use a property program called Property Tracker, which helps me to figure out if this particular house is going to work for my need. Now, just to go through the pro forma, the way it's set up here, the first year performance projection, it gives the square foot of the house, it gives the initial market value and the purchase price. If you have enough money in your IRA to cover that $67,000, you buy it outright cash. And then there's about $3,000 worth of closing costs. So then you see the first bold highlight. It says initial cash invested, $70,000. So if you got $70,000 in your account, maybe with another $5,000 or so in reserves, you can buy this property. Just simple. And it's a done deal. Once you do all the paperwork, and just like any other hold purchase, it's a done deal. And from that point on, the rent starts going into the IRA. Then you've got operating expenses. What the gross rent would be on this particular property would be $825 a month. You do accommodate for vacancy, because that's a reality. Nothing is rented out 100% of the time. So you have to consider that. And one thing about Seewing you taught us to make sure when you're doing these pro formas that you account for that. Even though you may not have a vacancy now, it may be occupied right now, there'll come a time when it may not be occupied at some point. So you do have to account that in to your entire figure. So you include the property taxes, the insurance, the management fee, because all that's going to come out of your rental proceeds. Then when you go onto the right side of the screen, you see what your net operating income is, which is $488. So that's basically after the taxes, the insurance, the vacancy, all that's been paid. Then you have net operating income. And then because there's no mortgage, your cash flow and your net operating income is the same dollar amount. Now, if there was a loan on that, you'd have to subtract the loan out. But in this case, remember, we paid cash. All you needed was a little over $70,000, and you got yourself a house. So every month, that $488.40 is going to go back into your IRA. So that's just a win right there. You do nothing. Once you do the transaction one time, nothing else. You don't have to do anything else. Every month, Buffalo Turnkey sends out, or actually their property management, ABC Property, sends out a statement on how much rent is coming in for that particular month on each property. And then the only step I have to do with the IRA, there's a one-page form, or actually 2 pages. It's a 2-page form. I have to fill it out, email it to the interest group, which is the trustee. They're the ones that are receiving the money, because remember, the money's not coming to me. It's going directly to the IRA. So I'm just basically putting them on notice on how much the property manager is going to send them. When they line up those two, that check and that piece of paperwork, they know how much is going to go in, and then that's what gets deposited, and they know what it's for. It's a really simple process. It sounds much more complicated, I think, than it actually is. But here's what I found out. Once you do it one time, it becomes easier the second time. So then the second one we bought, we put it in my husband's IRA, and we were actually able to put a duplex in his. And he actually averages about 700 a month or so in rental. That that cash flow figure, remember where it says 488?
Right.
He actually averages about 700 a month in his. Because it's a duplex, mine is a single, and I average about 450 a month in mine. So it's been a win. I'm not complaining. I'm very happy with those
Yeah.
two.
Yeah. With that said, the cash flow goes back into our tax deferrals and any appreciation, which in your case, virtually all 6 of your total rental property you purchased away over the past 2 years, you have seen some fairly nice appreciation and positive income. So everything's tax deferral. One more technical thing is anytime that you have any kind of maintenance that the property management need the money for, the maintenance money has to come out of the IRA. So your IRA cash reserve will be allocated to pay any kind of maintenance and repair because these are still in IRA. And one more thing is that the rental income, this case, $488 monthly or $5,860 annual net cash flow IRA. Like I said, you have to preserve the integrity of the IRA. You have to follow the tax rules. You cannot commingle personal money inside your IRA. Ideally, just like any other IRA, the IRA is not that complicated, like you said, Julie, because investing using IRA to buy mutual funds or stocks and bonds are really no different than using IRA to buy rental properties. The paperwork is still the same. The tax deferral, the tax regulation is still the same. The ideal world is for you to invest until age 59 and a half at the earliest. Then you have the discretion of going to retire at age 59 and a half or a little later about you can liquidate the cash flow income, the rental income, the net rental income, and paying your ordinary taxation at that future point in time. And hopefully your marginal tax bracket at retirement is presumably lower. You can assume that as you pay a lower tax on your rental cash withdrawal. But if you withdraw the rental income, or in this case, before age 59 and a half, you have to pay a 10% early withdrawal penalty. And additionally, you have to pay ordinary taxation of the amount of withdrawal. So that could be a very significant hit.
So you make a very good point. But I think what people need to understand, the same would be true if you just had it invested in any type of mutual fund in your IRA. Anytime so it operates exactly like a regular IRA. And I think that's where people need to understand. It's no different. The only difference is it's self-directed. So I'm telling them, I don't have a broker calling me and saying, oh, you should buy this, you should buy that. I'm telling them where the money's going versus hiring a broker and having a regular IRA. And he can tell me this is good or that stock is good or that mutual fund product is good or whatever. And the same ramifications apply if you take it out before you're 59 and a half. You're going to get penalized or whatever. But I think it leads to you have so many more options with the IRA than you say you would with a mutual fund. I just think that there's so much more benefits, and we can talk about that as well, in terms of being able to sell it and maybe re-leveraging the money for something else. So yeah, there's a lot of things you can do, I think.
Actually, Mark, I want you to say something. I do not want you to wait till it until the end. So Mark, you have enough money from your previous IRA to buy the duplex. What source of the previous IRA did you have that allow you to use that to self-direct into your duplex? Was your previous employer or your previous traditional IRA that you had?
It was my previous employer, actually through my union, and it wasn't a 401k, it was an annuity is what it was. And Julie had set it up during the time when she was a broker. She had set it up for it to grow, and it grew extremely well. And like she was saying, we had rolled it over to a guy who really didn't do too much within the 3 years they had. And then, of course, we wrote it over to the self-directed IRA. But all I can say is that it's the best thing that we've ever done because it's growing consistently. The people, the people that are in the duplex, they pay their rent faithfully, and we've never met them, never seen them, never seen the property, and that's the amazing part about it. And they pay faithfully, and so the self-directed IRA owns the property, and it continues to grow month by month. And my wife, she keeps track of everything while I continue to go to work every single day. But I guess we'll be looking at the balance of what the according to what you're mentoring, according to your mentorship, you're also teaching us options of possibly selling the property and moving on to something bigger and better. Everybody that's out there listening, take the leap. Seewing, he's been awesome. And even the people that we're dealing with, the Kanazis in New York, nothing but awesome, honest, and we're looking to be able to explore other markets as well. It's for sure, but it just takes a little bit of patience and a little bit of doing.
Yeah.
Yeah, Mark. As a matter of fact, let's get off track just a little bit in a good way. So, furthermore, look, you guys are no different than most of my investors. Several years ago, you guys were newbies, inexperienced investor, but you took them the leap of faith of working with my network and my fee-based coaching services. And I thank you for your trust in me. So it's a value added proposition. Anyway, other than that, the self-promotion. In addition to these two property you guys purchased with your inside your IRA, you guys have purchased just in the past 36 months, 4 additional rental properties using traditional financing, 20% down payment leverage, buying under your name, which is a much more traditional way of buying investment properties. Regular financing, 20% down, go through your FICO score and all that stuff. Although buying through the IRA itself, because you're buying in the name of the IRA, you don't have to, it's not a personal stuff. You don't have to put in personal credit. You don't have to quantify using a full doc loan, nothing like that, because buying the IRA is a completely different animal in terms of guidelines and regulation and what have you. But you guys also purchased the 4 rental properties using your name more because you're working. So you qualify, you have good credit, and you got a nice investment loan at a very low rate a few years ago. Maybe, I don't know how low, 4% mortgage rate to get finance, which is amazing. 20% down to buy other 4 rental properties. And you guys made some significant money out of that so far in a mere 2 years. But from a high level, I know you guys spoke about this before in other webinars that we have done. But from a high level, Mark and Julie, can you share with the audience the other 4 rental properties you purchased? As you look back today, what was the result of those 4 additional purchases?
Yeah, it's the same. It's no different from really what we have bought inside of our IRAs. Only difference is that these properties are outside of our IRAs, and it's the same. We get the rents every single month. Of course, pay the garbage and pay the water, and we get those bills coming to the house. But the renters actually pay for it. They're paying it. On the other hand, what you have to realize too is that not only are we getting the rents, but we're also building equity. A lot of people, they don't think about that. Also, the difference with this is now we have actual mortgages because we, use down payments instead of just buying them outright. We put money down on these properties. And so a lot of people might be afraid to jump out and buy because of the interest rate or because of they're not sure what the market's going to do. It doesn't matter about the interest rate, and it doesn't matter what the market is going to do, because the person that you have in that property paying the rent, they're paying for it.
Right.
Never mind what the news channels are saying. Make the money. And if you're not sure or you're afraid, my saying, a friend of mine and I had years ago, jump and grow your wings on the way down. Take the leap. Seewing has been a phenomenal mentor. And if he was crooked, we would have known it by now. So he's not that. And I want to encourage people to kind of work as hard as you can, earn as much as you can, max out the dollar amount that you're putting into your 401k, max it out, pay off your credit cards, get all that stuff out of the way. So then that way, everything that you're earning, you can start putting towards purchasing property. It's a snowball effect. But you got to start somewhere. So if you've got the money to start.
Mark and Julie, my takeaway from what you just said, Mark, and thank you for your kind words, is that especially in light of today's housing environment, economy, whatever, too many people out there are paralyzed by fear. They are all these negative headlines, all the impending recession, the inflation environment, or housing market is crashing, whatever. All these doom and gloom headlines, especially perpetuated by those housing crash videos out there, they just paralyze a lot of people and prevent them to achieve the American dream, which is very sad. So you guys are able to whatever being necessary to overcome all those misleading, inaccurate, negative headlines, the doom and gloom people out there that they want to promote negative news. That's how they make their money by all this. The world coming to an end and the world is melting. And at the end of the day, we did not have a housing crash. Housing prices are still performing. Housing market is still performing very well, and we're on our way to have a very good housing market trajectory. But what I hear from you guys are saying is that regardless of our economic environment, it's never the wrong time to buy real estate, because as an investor, like you said, Mark, it positive cash flow coming in for the right now. That's all you care. You're not going to sell your property. Even if lose value is only on paper. You lose value only if you panic and sell your rental property. But as a risk investor, you're investing for the long term. You stay the course, you collect the rent, you achieve positive cash flow, you have the renter pay down your loans, and you are getting some equity. You already achieved a decent amount of equity already on your 6 properties in the past 2 or 3 years, getting amazing tax benefits and what have you. So stay the course. And so that's my takeaway from what you just said. Julie, having kind of thoughts?
No, I agree with you 100%. The thing is, we knew what our goal was. We weren't trying to get in and flip and turn something around in 6 months or whatever. So that was our goal. We were going to invest for the long term, which that's the whole purpose of investing. When Mark stopped working, we will have income coming in. It doesn't matter if the housing market is up, down, sideways, flat. It doesn't matter, because we always have a renter in place. I think that's the part that people miss. They're so paralyzed by the news or the fear or whatever. Some people analyze until they're paralyzed instead of just taking that information that you know and just taking the leap, just leap of faith based on it. For me, I am not a risk taker. I am not the one that's going to go to Vegas and try to win, or not going to win the lottery. I'm going to do all of my due diligence to the best of my ability. And then there's always something that you don't know that may come up, but I'm going to take a calculated risk and I'm just going to do the best I can. And that's what we do. We took what little money we had, we maxed it out to the best of our ability. It has paid off, and the property values have gone up. And then one thing is, New York, those upstate New York properties, we're not in the city, but upstate New York, it's a working class town, but the property values are still going up. That's what we were surprised with. So we thought, wow, we've only had, I think the longest one I had is actually 2 years this month. I've had it for 2 years in this month in July. And it's got up in value. And all the other ones we bought since then, even the one we bought earlier this year, I think posted in January, it's gone up a little bit. Oh, we're happy with it. We're excited about it. The rents are doing well. The first couple of properties we bought, they've increased the rents on those. So there's no loss for us. It's went all around, really.
That's right. That's right. Great to hear. That's it. Thank you so much for your time. Once again, you are great to work with, and your endorsement of our services is precious. Thank you so much.
Thank you. Thank you, Seewing. Thank you for all you do.
All
Appreciate
right.
you.
Thank you, everyone, for attending this Seewing. You have a nice day. Thank you, Julie and Mark. Have a nice
Okay. God bless you. Bye-bye.
Thank you.